Good evening, traders out there in radio land. This is Johnny Rambo checking in with you. Good evening. I'm going to do a couple of charts. I'm going to go over some charts right here. I'm going to talk about the markets a little. I'm not jumping in the chat room, so if you happen to be listening to this is live. It is 9 p.m. and it's live. So first thing we want to talk about today, let's turn off the background music here a little Frankie Sinatra going on here at Day Trading Radio. We're going to just go over some of the setups today, being a Monday, and again, looking at the overnight trade on Sunday night. I always do this when we get in the morning. Again, for those out there who are not familiar with Day Trading Radio, we broadcast live every day since 2007. Get into markets. We're usually here between 8 and 9 o'clock, start broadcasting, and then we trade the whole day. We have a great community of traders, and we trade right to 4 o'clock. And lots of times I'll do these overnight shows, especially if there's some activity in the markets, which there isn't any right now, but we'll talk about that too. But again, strategy here, we're going to be talking about futures tonight because that's a good way of making some daily cash. We also trade stocks and options, but there is definitely some better opportunities in future trading as you get, many more setups during the day and short-term setups, and you could really profit from them with a little bit of money. Not a big investment like you buy an Amazon or Tesla stock and have to get in and out of that. If you're not trading the options, you have to usually put up quite a few pennies on that. Really dollars, hundreds and thousands of dollars. So futures is a good way of going. And now with the introduction, not an introduction, but just the focus on prop trading, you can really get into the markets and trade and not really have to put too much in it and have an opportunity to actually make some money. So we've been focused on that, and I want to show you some of the opportunities you get when we do trade like that. And it's very important. I'm going to go over a list of what really makes, and this is going to be such an important list of things that you have to pay attention to. So we're going to start off with that. I made up these 7 rules. I was actually working with some of our traders. I do some coaching with our traders. If you're interested in coaching, if you want some additional coaching, just head over to DayTraderRadio.com. You'll see a banner there discussing it and how to go about getting it. But I was working on some of the rules that I kind of pass on to important, especially newer traders out there who are just getting into trading. And it's very difficult because you're overwhelmed by so many different things. And over the years of trading, over the many, many years, 25 years now of trading, I've really come to a point of when I do teach, I've scaled, I kind of, what's the word I'm looking for? Strip down everything. I strip down to only things that really work. There's so much out there that you can learn. There's all these different indicators, and there's all these different terms, and just so many different ways of trading. But it really comes down to a couple of simple rules, and I like to teach that and get a good foundation for traders. It's very important. I mean, I'm doing it a long time, so after you do it for so long, you want to just eliminate the things that are not always working, and just adapt to things that always work, or at least work most of the time. So that's really important. And the number one rule is not over trading. So the whole methodology that I teach kind of puts us in a situation where we can't trade unless we have a certain setup, and that's important. Because if you just randomly trade in the markets, it's like, you could just get chopped up, and you will get chopped up. I mean, the market is meant to chop you up. The algorithms are meant to, play games and take different levels and make you look like it's going to run away, and then you get in, and it pulls back, and you get out, and you go the other way, and it goes back up, and it's just very choppy. And there's certain signals in the market that you want to really pay attention to, and that's what I teach. So when you identify those, that we could trade those and profit from them. But the important rules are, again, don't overtrade. So don't ever trade, trading whenever there is not a HPS setup is over trading. So that means, out of the 3 setups that I show you, the 3 techniques that I show you, if this is not one of the techniques, I consider that over trading. All right. We use a lot of stochastics. I like to use the stochastic oscillator a lot. That's my foundation indicator, the one that everything else is built on. And let's take a look at that indicator right here. Here's the stochastics are down here on the bottom here, and this has a range between 0 and 100. 0 being the oversold level and 100 being the overbought level. But we don't really pay attention to stochastics like overbought and oversold, even though we accept that as a condition. Is a condition that we identify because the stochastics are over a certain level or under a certain level. But the true beauty of stochastics are divergences. When the stochastic diverges from the price action, when the stochastics are supposed to be doing something, but all of a sudden do something opposite. And when that happens, that's what we count. That's when we take our trade. So just an example here. This is our textbook divergence right here. And you can see general market. This is a great example right here. This happened last night. Just in this little, you see that little channel here? And it's channels like going down here. And we're moving down, and then we move up, and then we kind of move down, and we move up, and we move down, and we move up, and we move down, and we break out. So typically the stochastics are going to give you that on a short time frame. This is a 1 minute time frame. This is the smallest time frame, even though we do trade, the tick chart and some other things. But this is time-wise, this is the fastest I like to trade. I don't, go any different than a 1 minute. Well, I prefer people to start off trading the 5 minute because it's slower and it gives you, more opportunity, better and longer periods to be in the trade. If you're going to trade a 1 minute time frame, you have to respect how it moves. Oversold to overbought, to oversold to overbought to oversold. I mean, this is not giving you a lot of profit, and you could actually just get chopped up if you're not abiding by that rule. So when the stochastics, the underlying stochastics, and you see that momentum push up, the price should be moving up. And when the stochastics moving down, it moves down. And when the stochastics move up, the price go up. Or actually, I said the price go up, price goes up, stochastics go up. When the price comes down, stochastics come down, price goes up. And you can pretty much, I'll put a line here so you can see that right there. We got a kind of nice little move up until we got overbought. And then from that point here, we pulled back until we got oversold, and down here we got oversold, and then we moved back up till we got overbought, and then we moved down till we got oversold, and then we moved up just slightly, but it is up till we got overbought, and then we moved down. But the key here is you can see typically, when the market's going down, you're making a series of lower stochastics kind of pointing down here. All of a sudden we have a higher stochastic band like that. This is higher than the previous stochastics, and it's above that 20 line, yet the price is lower. So that is telling us, that is our signal, and that is important, and that's what you have to wait for. And I guarantee you, if you wait for that signal, you will become a successful trader. But I also guarantee that you're not going to be able to, because the lure of easy money and being in the casino of life, being in the casino of the markets, it's very hard to, sit here in front of your computers and not take a trade. So maybe you want to take this trade. Now maybe you can. Maybe there's, you can take the trend down. It's not saying that you can't trade every aspect of this market, but what I teach are divergence trading and the higher probability zones where you get bigger moves. So I'm sticking to that, and that's what I want you guys to stick to. If there's something else you're going to do, I don't have no responsibility for that. You're on your own with that. I want to show you what works the best. You're going to have that information, and what's going to happen is you're going to say, wow, I could see it. I understand it. He teaches this pretty good. It makes it he puts it a way that I understand it, but I still need to find my own way. And most traders do that. Remember, I've dealt with thousands of traders. So I see these traders go off and they try to find their way. And that's okay. We all have to find our way. And what happens is they find their way and they get frustrated, or they'll trade a lot and overtrade. And what happens is when you start to lose, or you trade too much and you get a bad beat, you tend to trade more because you want to get that back, and you start to revenge trade. And sometimes you just say, F it. I'm just taking it because what the hell, I feel awful now. All I got to do, all I want to do now is just trade and make that money back, and I'm just going to take it. I'm going to be self-destruct mode and just take any trade, and then you're going to blow up, and you're going to learn the lesson, and then you're going to come back, and it happens. It happens to everyone. It happens to me. It happens to you. It happens. It's human nature. The object of having a methodology, and this type of methodology, is to kind of keep you in that box so you don't have to overtrade. You don't get forced to do that. You know what works and you have confidence. It's like waiting for your pitch, Don't swing at a bad pitch. All right, back here with you. So picking up where we were just talking about the importance of just taking the setups that are defined for us. We had a let me turn this off in the background here so I don't hear myself. Turn that off here. There we go. Make sure we got that. So yeah, we had this little divergence here. So what we're gonna, there's a couple things I wanted to point out today. The importance of that divergence, even though this is at 12 o'clock and the divergence came up, I'm watching right now. Right now it's about a little after 9:30. If we have a divergence, I would take it. If it was a decent divergence, we had a decent channel like this. This stuff happens. This is at 12 o'clock last night on a Sunday evening going into Monday morning. That's a decent channel. You easily see that divergence, and the market started climbing back up. Now it rallied all the way up, and we actually had a little divergence there with a little pullback back to the 50, and then popped back up, and then just followed it around. And I'm not getting too involved here, but as you can see, the band of stochastics we have here and the rules that I had applied here. The second rule here, always enter a trade with a 9-3 on your side. Now what I mean by that is just making sure your time frames are on your side. Doesn't make sense when we look at the overbought and oversold and we see the market here trending up and down in the bigger channel. It doesn't make sense to buy in an overbought level, and so many people don't even pay attention to this. So it's important to pay attention to that. Especially in the case where they all come up together. This is what we call a quad rotation, and we have an indicator on the Rockbot for that. Kind of identifies that when they all line up like that. All right. That tends to be a top. And when they all come down and they're all oversold, and it's important, they all have to be in a certain situation. You have to see that little dotted line on the 9-3, on the 14-3, on the 44. You can see the dotted line on the 20 line, and you just have to kind of get them all lined up. Like here, they're already starting to bounce. So this was probably closest to the level here, and you can see that was probably the closest to the level of a quad rotation to the buy side. And here you could easily look back. You can see here, and here would probably be that one right there. And I'm just looking at it. I'm not even going, until we get to a point where we're embedded. And once we start embedded stochastic, meaning our 60-10 is flatlining, that means the trend is strong to the downside, and that you probably want to short all your other rotations up. Every time you pop up and you get overbought, it should rotate back down. All right, until it starts lifting back over that 20 line and starts moving back up. Once that happens, then maybe we have that uptrend here. Now, this was at 9:45 today, 9:30. Actually, we're mentioning that relative divergence right here, and that divergence right here from this low to this low, and this low to this higher low. There was a pretty decent little divergence that was happening there. And we kind of called that out, and we actually got a nice rally out of that. Once we started moving up here, and again, this is all we're looking for. I'm not worried about everything in between what's happening. I'm really worried about, our quad rotation, our divergence, and our flags. All right. So once this starts to rotate up, this is our 60-10 stochastics. Either when it's rotating up or embedded, and we get up a pull away from the 20-period moving average, and we pull back to the 20, and this rotates down, but this stays and continues to push higher and stays embedded, that is a good chance that that's going to be what we call a 2020 flag. And we're going to flag out of that because that's just a continuation pattern. So we had that, and then we had a little short here with a pullback, but a flag defeats a divergence. So if you get a divergence and it flags out, meaning that it holds its level here, holds above that 80 line, perfect, but it pulls back, it holds above the 20 and closes above the 20, that's a bull flag too, and that pushes even higher. So these are the two bull flags we noticed today. We had a couple divergences, and the market kind of rallied all the way up to the highs around 1150, and then we kind of topped out here, and this was right up against the previous high. So there's some levels that we pay attention to. Just support resistance line, previous highs, previous lows, current highs, current lows, opening and opening range, opening areas, and closing previous closes. These are all things that are added together and put into a formula, and that's how you get your pivot areas, but they're all very important. So we wait until we get that pullback and we start to establish a couple pivots. The pivots are areas where the markets move up and then they move down, and then you have this little pivot, and you have an up and you have a down right here, and then you have another pivot. So once you have those pivots, you put a parallel line in here, especially if you have a pivot down. And you have three pivots. One, actually there's 2, 3, or you can use 1, 2, 3. Once you have those, you draw a straight line on the one where you have 2 or more, and you draw a parallel line where the one is, the low-hanging fruit here, that little dip down there. And then you just keep that in mind. You keep that trend in mind. Now this ended up being a wedge pattern, which once it came in here, and we could identify that as a wedge. And this is a perfect textbook wedge too. You can see how the wedge, if we get rid of this line, and now you could really see the wedge here. And this was kind of the action today. This was pointing down. The 60-10 was moving down until finally we got oversold here on a quad rotation, and then that was the big move. We got a move back up. Didn't really rotate back up. It was about 120, pushed up against the trend line, and it rolled over, came down to the trend line. Another quad rotation. And again, as these things set up, these are also on our bot channel are also going to be identifying these as, different setups. So if we have a quad rotation and this gets identified, if we switch over here, this is the rock bot. That's on the 3-minute time frame. That's at 10 o'clock, 9:50. You can see that beautiful area there. But let's go to the 5-minute chart, because I always stress the importance of that 5-minute chart using the super signal. So the super signal is going to put a blue line in there. And again, this is available for your NinjaTrader platforms. If you want to run it yourself, you can get it at Day Trading Radio. So you have a nice little rally up here. You actually ended it with, there's a couple little shorts along the way too. That high and that higher high, and then that short all the way down. And then it went long again here, and a nice pop. Again, we're really just paying attention to the longs here. Wherever the blue line is really where that setup is. 2 o'clock, 8 o'clock. This is what are we on, the 5-minute time frame. So this is the 5-minute. And then we also use, and I wanted to show you this today because for those out there maybe using the super signal, and again, that's the best script we have. The bull bear flag works great too, but it's easy enough to identify this. But this one is very important. And let's take a look. We're going to put it on something I've been using today. I've been trying out the 300 tick chart. We've been using the volume chart a lot, but now we're going to run that on the 300 tick chart. And it really doesn't matter what it's running on because this script that I'm running is just, it's dynamite. Look at this. It nailed the bottom here. And again, this is a script that's running on the 300 tick chart. Now you have a pull down menu on your NinjaTrader. It tells you all the different, you can go time frames, the minutes, seconds, you can do range, you can tick and volume. Daily, weekly, monthly, yearly, etc. So it has to, 1 minute has to, 1 minute has to pass for that candle to be made, or 5 minutes has to pass before the candle to be made. Same thing with the ticks, the volume. The volume, it has to be 1,000 contracts before the candle is made. That's what we're using, the 1,000 contract. If we want to use that. Or a 2,000, we don't even expect. These things work so good. So we want to see which one's working. Plus we got the tradeometer to help us identify these zones also. So many good tools that we have here. So that's the 1,000 volume. Oh, here it is. Here's the 1,000 volume. You can see, look at this. That's a Picasso right there. Long all the way up to a short, all the way down, long all the way up, long all the way up. Look at that, to a short, and then we came all the way down. This was amazing, and this is on the 1,000 volume chart right here. And it prevents you from over trading. This is going out. This is active right now. I mean, if we have a setup here, the volume is going to, remember, this 1,000 volume chart is only going to make a candle if there's 1,000 contracts traded. Then the candle will be made. In the middle of the night here, you're not going to see as many contracts. It's going to take a little bit longer for those candles to be to make. So you're not seeing a lot go on here. It seems all bunched up. It's just not much activity. But during the day, you're going to get that very active candles being made. A lot of volume in it. Volume brings on volume too. So this is an excellent 1,000 volume chart. I did a couple videos on it. If you want to find out more about this chart, just email me. I actually have that running tonight here too. So let's jump back over to the main chart. So that's the 1 minute. And again, you could run this on any time frame. And you can run it on anything too. I like to run it on Bitcoin sometimes. Bitcoin has been I've never ran it on the Bitcoin volume. I don't know if that's even gonna play out. I'm not gonna waste my time until I set it up properly. All right, so let's jump over to the other screen here. But this is very key. And while I'm at it, if you want to get access to these scripts and you have the NinjaTrader, you can do that. If you're a member of Day Trading Radio, it's an add-on now. It comes with a lifetime membership for free, lifetime free. Also yearly, it comes with the yearly. But if you're a monthly, you could get the monthly add-on. But if you're an old monthly, I just opened it up for old monthlies to come back and pay. It's just a little add-on to get it add to their to them. So if you're an old monthly and you want to add that, or maybe you're not even a member of Day Trading Radio, you could also get it. If you're not a Day Trading Radio member, you can now get the Rockbot code, the scripts for NinjaTrader, and you could lease those. I'll just put the information in the description of the video, or you can reach out to me at ironaction@yahoo.com. Let's show you. I'll set you up with it. All right, but check the link first. That gives you all the information. So let's jump back over here. And again, follow the day. We broke out of that. We pulled back. We kind of measured out this little bearish flag. It dropped. It got a little choppy. You can see the market here. We're just following things here. We had the 350 murder algo. We were kind of, so you see all these lines during the day. This is what I do. I'm the broadcaster of the market, so we kind of identify these levels live from the open, 8, 9 o'clock in the morning, all the way to 4. And as you can see tonight, 9:30, 10 o'clock coming in. If there's any setups, I will definitely point them out. You can see there's just choppiness sideways right now. But let's go back to the rules of the game here. The rules of the game, very important, the rules. Let me bring my rules back up here. Don't mind me taking a little second to find them all. I have too many windows open. Okay, so don't overtrade. Whenever there's not an HBS setup and you trade in, it's overtrading. Always enter a trade with a 9-3 on your side. If you go long in a downtrending market, always take your first profits on the 9-3 rotation above 80. Now, a lot of people, most people are buy-side traders, even though you probably make more money going short because the market does kind of move down pretty fast when it does move down. But if you're fighting and you find yourself going long in a downtrending market and you get a divergence, one simple little thing to do to protect you, it's called a safety net. And let's go out here and kind of give you an example of what we're talking about. And I'm talking about a pretty steep downtrending market. This could be one here. I mean, we want, if the stochastics are down here, either the 60-10 are either pointing down or embedded. That's what we mean. This is a downtrending market, really based on your 60-10. That's their lower stochastic band here. You don't see any lines on or anything. This is what I teach, how to set this up. I give you the templates and everything for this chart, and to help you out. But as it's pointing down, and your trend is down, and you decide to take a long for whatever reason, say you get in long here to the quad rotation, you take that long. You want to wait for your first rotation here, and once it gets that first rotation, maybe it's around here, when it gets up to above the 80 line, especially if all 4 of them get up there, but really the 9-3. If this is down here, and you get a rotation up, this is typically a bear flag, and you want to take that off. So automatically, what you're doing is you got a good entry. You have a quad rotation. Most likely, quad rotations will give you some upside unless the trend is really strong. You start to get the move up here, but you find out that your 9-3 rotates really quickly, and it gets up above 80. At that point, you should take partial profits because the odds are that this is going to continue in the direction of the trend. So what you should do is say you recognize the setup here as a quad rotation right here, and you got in right here, pretty good entry. You jump in, you get up, and you get out right here. So you're in here, and you get out here. And what you're doing is you're placing your stop, at break even, basically right at the break even level. So that way you're not, even if it does come down fast like it did, you're not taking any loss. Some cases I recommend just taking the trade off and just saying that was my trade. I am a 1 minute time frame trader. You recognize the time frame that you're trading in. So, apply that and abide by that time frame. It's not going to be, you're probably not going to get a huge 10-point move from this level. You're probably going to get a 10-point move from a better, not at 1 o'clock. You're probably going to get a nice divergence set up on a 5-minute divergence. You're going to give those bigger moves, which we did have, Same thing. You get oversold, gets overbought, you take it off. If it goes higher, so what? You still have extra on. You have your entry in here, quad rotation entry. You're in at 44.24 and a half, and you get up to that trend line and you take partial credit here. Partial, you got 3 points, 3.5 points. You move your stop up here and it continues to run. Take the rest off. All right, after you'll feel pretty good, especially if you see this starting to move up. The 60-10 is on your side. Just like if the 60-10 is against you, you probably want to take that. But if the 60-10 is on your side, meaning it's curled up and it's moving higher, then you probably want to hold on to this longer because it's going to move higher. And higher means off of that 20. If it's stuck under 20, then beware. If it's starting to ramp above 20 and you get a nice quad rotation and you see that downward channel, there's a good shot it's going to move higher until you get that quad rotation sell signal. And when you have that quad rotation sell signal, then you should consider, taking it off. And then wait for the next setup. It's all about the patience and taking it off. And, really waiting for it. Don't get in here. This is chop fest right here. This is sideways action on the 60-10. It's not a quad. I'm always looking for things. We did notice a little small divergence here and here. That's what I noticed right here. And it did get a little move and a chop, but it was really choppy, and I wouldn't recommend that because there's better setups. We're looking for divergence, but it did not give us divergence. We X'd that out. We were looking for maybe one here, but it did smack down. It didn't do anything. It did come down and rebound. It definitely did, but it wasn't really a divergence. It held above that 20 line and didn't give us really a quad rotation either. But sometimes that will, you just won't have the perfect setup and you might miss a nice little move. But there's, we're doing this every single day. And what's great about this is the great days, when we have a good market and we're seeing these setups happen all the time, you want to have those prop accounts ready to go. And that's when you want to take those. You really want to just load up and take them and get those accounts qualified. And you should always have one ready, to go. Sometimes, some days it's not going to be great. It's going to be choppy, and those are the days you have to realize that's not good market, not good conditions. It's like going out in the ocean with bad conditions. You're not going to catch any good waves. So too much chop. Wait for the perfect wave. Wait for the perfect pitch. Wait for the perfect hand to place your bet. Market here starts to get a little. This is coming up right at the close. Of course, at the close, nothing's really going on there. And this is what we got here. Market's actually at this point right now, coming up on 10 o'clock. And we're just going sideways. I don't know if there's any Asian news out or anything. But I wanted to go over that. Let's go back to the rules here one more time. Don't overtrade. So again, if you're going long in the downtrend market, always take your first profit on the 9-3 rotation above 80 in case of a long trade. Then move the stop to break even or even close it out. Rule number 3 or 4, don't overtrade. Again, Fight Club. First rule of Fight Club, never talk about Fight Club. Second rule of Fight Club, never talk about Fight Club. First rule of trading, don't overtrade. Fourth rule of trading, don't overtrade. Never pass up a steep divergence. These are your money-making trades. Steep divergence is your money-making trade. So I will do my best to identify that to you as much as I can. Those are the money makers. When I say that, it's about the the angle And the real good steep divergence is if we're looking at a divergence, a real divergence. Here, this is a pretty good one. This was a 12, that low and this lower low. And you see that if I move this line, you see that line right here? Let's not talk about this line here. Let's just get rid of all that. But you see how high that, you see that dotted line on the bottom? That's your 20 line. And you see how there's this, it's definitely above that. And you see this angle here? This is angle gives you a little degree markings. This is a degree. It's about 8 degrees. You want to have it above, I would say above 6, 7. The higher this number, the better. So the higher the angle, the better the setup. So right now this is about 9. I always say anything over 10 is really good. 12, 14, anything like this on a high angle divergence, closing back above the 20 is, and you have that lower low, and it's not a, you're not guessing the you're not squinting or pushing it, holding the monitor sideways. It's an obvious divergence, but this is very steep. That is your money making trade, and that's what you have to be in with the ES or the bigger contract. Let's go out here, see if we can see any. I did a here's a nice steep divergence here. You see this low and this lower, this double bottom right here. It's a little sneaky double bottom at 310. Look at that. Look at the angle of this. It's about 8 degrees. And look at that big move. And then we had actually a sell divergence into the close there, I think. Yeah, we did. And these divergences, they don't pop up like, weeds. They pop up more like morel mushrooms. They're harder to spot. And when you spot them, you have to take them. But the flag. So we're looking at the divergence. We're looking at the flag. And we're looking at the quad rotation. 3 real good setups that we want to take. And that's what the alerts are going to go out for. So if you want to be part of that and you are a futures trader, especially working on your prop accounts and stuff, you want to have these coming at you. So I have a great alert system. Now we're working on the Zello alert system. Remember to get that. It's instantaneous, coming through the phone. I'm going to be activating that all day tomorrow, meaning all the trades will go out on the Zello network. That way, if you're not even in front of your computer, I give you the setup, especially if it's a high probability setup in the face of maybe a 5-minute divergence. If it's a steep 5-minute where I know there's probably 10, 20, 30 points, a big move possibly happen, I want to make sure that you get those alerts out. Right, even right now, if the volume came into the markets and I would see something, I would jump on the Zello right now and send out the alert. So remember, when you have the Zello on your phone, activate it so you could get it even when your phone goes to sleep or it's locked position. I won't bother you, unless it's worth bothering you. So just keep that in mind. If you do get an alert from me or you want the alerts, you could always put it on sleep mode or you could put it on do not disturb. But if you want it to be, at 10 o'clock, and I see a great divergence, and you're that type of trader that knows to act on a great divergence, I don't care if it's at 2 o'clock in the afternoon or 10 o'clock at night, and you want that signal, then keep the app on your phone active, available. I think I did a lot for now. Now I'm actually just here waiting for a setup here, so we're going to send this video out, kind of update you on some things. I'll give you one stock for tomorrow. We do a lot of stocks. I will do an update on the stocks too. Just a fast little update. And the market's actually been pretty good. We have the CPI tomorrow, GDP and retail sales coming later in the week, and we have the government shutdown. Hooray! Next Saturday. See if that's going to play a big part here. Let's take a look at the SPY. There was actually a nice 5-minute divergence today on the SPY. Can you recognize it here? Can anybody? Well, I already pointed it out with my divergence line here. So right there it is. So look at this. We zoom in. You can see the nice little trend down, the lower trend line underneath the low here, the lower low, the low, lower low, the low, the higher low above the 20 line. The more you zoom out, usually it's easier to see. So we don't see these too often. When you do see them, you have to take them. There's your divergence. There's your divergence. And yeah, it didn't move. It wasn't getting you rich, but it could get you rich. When something happens like this, it's a high probability, and it's almost definite that you're going to get that move up, unless there's some news out there that strikes and you get a bad break on some kind of news or something. But typically, these are the ones that if you have a 5-minute divergence on a cash chart, you want to take that, especially if it's a steep one. You can see it right there. And especially if it's in a channel, you want to take it. So the trades are here. We just have to wait for them. Here's a little divergence back here. Let's go back here. It's on the 5-minute time frame, remember? Let me go out here. Now I'm looking, scanning. Look at that. All right. 1 o'clock to 2 o'clock on whatever day this is. Last November 7th, last week. It's a good one. We have to work as a team to identify these because these are really money-making trades. You can see the difference in the angle here. It's also 14.3 divergence, which is a dual divergence here. You could definitely see the angle and the low. And that, look at the move after that. I mean, come on. Look at the move after that. You will find nothing better than what you're seeing right now. And it is doable. You just have to, you can't overtrade going into this. If you're serious about trading, you have to wait for these things. If you notice one, it's okay to get in it. Get in it. Put your stop at the break even. That's why you come here. That's why you come to work each morning, is to take this setup. All right. Wow, look at that. So let's leave it at that. I want to do a little research. I want to do a little trading here with you. I'm going to send this out. Have a good evening. Well, I'm going to be here with you now in the chat. So if you're out there in the chat, if you want to jump in there, go right ahead. I'll play you some music. We're going to do some stuff. I'll catch you guys. DayTraderRockStar for DayTradingRadio.com. And if you're out there and you like what we're doing here, head over to DayTradingRadio.com and sign up. You could also sign up for a free trial, dtr.tv/free. But if you want to get the scripts and run them on your own machine, if you have the Ninja Trader platform, well, we have great deals and sales going on right now. Or you can contact me for any more information at ironaction@yahoo.com.